Cheers.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Ask for what you want. This is a great card. Find the courage to ask for what you want. Others have the right to say yes or no, and you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 15, NASDAQ up 85, S&P's up 8.5. Gold contract up $29.70, trading out at $26.82 an ounce. We have silver up $1.45, finally getting a bid out here. $32.54 an ounce. Light sweet crude up $1.23. $71.60 a barrel. Notes and bonds. The 10-year note up 3 ticks, trading 117.27. The 30-year down 3 ticks at 125.01 in King Dollar. King Dollar's going after these swing lows, folks. King Dollar's down 418 ticks, 100.433. Euro is at 111. Yen is at trading at 143. British pound is at 134 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the S&Ps, let's take a look at them. No matter what we look at out here, folks, that dollar going to a lower price is telling me that, man, we are going topside, period. That's the real bottom line. But let's do this. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday. And don't forget, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, you get the opening call for 1 month for $149, 6 months for $695, which is a savings of $199 or 22%, and 1 full year for $1195, which is a savings of $593 or 33%. They all come with a 30-day money-back guarantee. Come on over here, check it out. You'll be very glad you did. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing good. Yourself?
Very good. Thank you.
So what do we think about this market, Basil?
So this is very interesting because on a purely technical basis, the Dow, on the left side here is the Dow daily. In the middle is the weekly chart. On the right is the monthly chart. I have no indication other than the Chapman wave notation of a peak D, and now we're in a leg E with a chance of, I don't want to get too technical because I did that this morning in my target conditions hour, and I'll do it again tomorrow at 10 o'clock, where I'll go through the different parameters that I'd be looking for if there was a change of direction. But most importantly, you can see the price is above the 9-period moving average, this green line. The green line is sharply above the black line. So to me, that's called the 914. That's very positive still. I don't have any indication right now to say that there should be a deep pullback. There could be, I've called it a breather, a consolidation in the different indices, and I'll talk about that in a moment. But the MACD is good. The relative strength, this gray line, is very strong. The stochastic's flat at 93% if you're long. That's what you want to see. It's fabulous to see a flat stochastic in the 90% area. The unbalanced volume is a little bit overbought. If you look at the weekly chart, and I thought I'd bring this up right now because of what you had said a little earlier when you were talking about gold. This is called the Chapman Inside Track Repellent Zone. So I draw these lines on the outer perimeters of the candle wick. And what happens is very often you'll see the price goes right to the door. It just can't open the door. It cannot get through to the green line. It just hits that and pulls back. Well, the weekly chart of the Dow is in leg D. You know, leg D is the fourth highest peak. That's where other things can happen. So we get a little bit cautious. But look at this. It's right there. Monthly charts in leg E. So I thought I'd just bring this up. You see this same inside track repellent zone? Well, have a look at this.
Yes.
There's the S&P.
Okay.
We're right up against it. And this goes back to the low of 666 back in March the 9th of 2009. I'll just open this up.
Whoa. That's a trip.
I mean, look at that line. And
Yep.
You had resistance right there at 48.18 in January of 2022, pull back sharply to 34.91 in October 2022. And here we are bumping up against that resistance. So I thought I'd bring this up, and I drew this, and I showed subscribers some opening call, and I did this on my show. Here's the gold contract. I mean, when I drew this, we were somewhere down here. It looked ridiculous that I could even talk about it. But here's the same type of, this goes back to 2014 at 1538. Look, this Chapman Wave inside track repellent zone, and this is the gold contract. We've just gone above it, and it's only in leg C. So that's very positive. So what I wanted to say is, within the context of, for subscribers, we took a very brief short the other day, and we got stopped out for $1.60. Oh, sorry, a 1.6% loss, which is really nothing for insurance. But the reason is I wanted to keep everything tight because there's a rotation going on. So we are long Microsoft way back from 338. It ran all the way to the 400, and right here, the 468 level is pulled back, and it's been consolidating for a while. So this is cloud operational system subscription and AI. But the AIQ, which is the ETF for the Global X Artificial Intelligence ETF, which we've been long for some time, here it is, and very close to an all-time high. So even within sectors, what we're looking at is there's a rotation going on. So Microsoft's in that same category, but AI, this particular ETF, is leading is almost at an all-time high. So what I've been pointing out is this: there's a kind of a rotation going on. We're still along the IWM. So this is the small caps. And look, for the first time, you've had a really good rally up. 228.63 was the most recent high in July, and we're just under it at 221. So I'm looking at this as if to say there's a rotation going on. If you look at high-grade copper, it was doing nothing for a little while, and look at the spectacular move today. And you know, for a long, long time, for years, we've been long the DBA, which is the agricultural fund, which is the soft commodities. And look, it's almost at an all-time high. So now you've got the minerals, the other areas are starting to come on, like copper, like gold. So that's this rotational aspect to the market. So it's so fascinating. Whenever there's a moment where you could get a pretty decent breather, something else comes along to kind of save the day. So we're looking at this rotational market, and so far all the sectors are doing pretty well.
Yeah, pretty amazing, no doubt about that. Listen, folks, get over to our website at TFNN. You're going to newsletters. You're going to see the opening call right on the right-hand side. Basil, you have a great one, safe one. We look forward to the show tomorrow morning.
Thank you very much, Tom.
Thank you. Stay right there, folks. Good man, Mr. Fred Ernest, coming up next.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow up 21, Nasdaq up 79, S&P's up 7.5. Let's get over to our man, Mr. Fred Ernest. Fred, folks, okay, is the CEO and president of Vista Gold. Vista Gold trades on the NYSE American as well as in Canada under the symbol VGZ. And bottom line is that, needless to say, we have gold right now at all-time highs. Vista's been moving. We happen to own Vista. Fred, welcome back to TFNN.
Tom, it's great to be back.
Absolutely. So here, since the last time I had you on, I mean, there's been quite an acceleration higher in the gold and silver market, lower in the dollar. You know, you've had a lot of action at Mount Todd, Australia. And give us an update, please.
No, it's been an exciting time in the gold business. Just this morning we announced some results of the second phase of our drill program at Mount Todd, where we're drilling a structure called the South Cross Lode. The veins there are thicker, higher grade. We announced amongst the results a couple of intercepts, 0.5 meter at 50 grams per ton, and another intercept of a meter-wide vein at 25.89 grams per ton. It's a pretty exciting time for us.
It's huge. There's no doubt about that. Fred, what happens of course, I've had the gold report for 22 years, and I've been looking, whether it's the gold equities, the silver equities, and it is pretty wild that gold is so much higher than we've ever been, but yet the equities still aren't there, so it's really intriguing. So what is has the expense ratio, I'm not just talking about in Vista now, but has the expense ratio gone up that dramatically that people are worried about it, or what do you think's happening there?
That's an interesting question. I think it's got everybody scratching their heads in the industry. Obviously, producers are doing better than anybody else because they're free cash flowing. Right?
Yes.
The developers, on the other hand, we're lagging, and I think that's in part due to the fact that producers are more interested in acquiring other producers to achieve an increase in ounces and maintain their production profiles today, rather than taking on the risk of developers. But that can't go on forever.
No, I agree. Yesterday I was talking on the air, Fred, that, we've been doing this long enough that I was saying, this is going to get really interesting because what has happened, folks, is that the ETF structures in gold, they were going down for a while. Now, they start coming back last year, thank God. But it's like, okay, is it going to be a frenzy? Because we know how the gold market works. The gold market's it's much smaller than people think, you know? So once the acceleration starts, it's pretty amazing. So on Mount Todd, I know you got a big investor in wheat and precious metals. What are the next steps as you're going forward in order to bring that mine, making that mine even worth more money?
Well, we've recently been talking about the fact that near the end of the year, we're going to kick off a feasibility study for a project that instead of being 50,000 tons a day, it's going to be scaled somewhere in the range of 12 to 17,000 tons a day. Nice. We're targeting 150 to 200,000 ounces of gold per year production, a capex less than 400 million, and a reserve grade around 1 gram per ton. We think that that'll be a much more attractive project in this market, and then certainly it can be expanded down the road. And we hope to finish that study the middle of next year. Nice,
because there's no doubt that the gross number of gold versus the gross number of getting it out of the ground for you, the expansion has been really dramatic, meaning in a great way because of the price of gold. And I can tell you, now this is my personal point of view, but this dollar right now, we're coming down, the dollar index I'm talking about, but we're coming down to the very lower part, and it looks to me like we're building cause for that dollar to basically get into the 89 area. Now, if that's what we get, we are going to get quite an expansion in gold. I mean, and we've been there. It's just that we've been at the 100, part for about 7 years right now. But like even today, the wide price spread that the dollar has, it's basically saying that, hey, we're going lower on the dollar, and we all know how this works. If you get a lower dollar, all commodities in general, but particularly gold, is going topside. And then on top of that, what do you think about the idea? This is really intriguing. We have gold at all-time highs. Now, silver's a big deal today. Silver today, we get over, I think it was over 1 million contracts, which you never get. No, it's over 100,000, sorry, which you never get. But what do you think the differential there is happening between the silver and gold market?
Silver's got more industrial uses than gold.
Okay.
And that's always been a driver for it. But yep. I think that silver has been lagging gold as well. And at some point, these two have got to realign, and I think that there's some opportunity for some movement there as well, Tom.
Yeah, no, it's a huge lag. There's no doubt that it's a huge lag. Now, let's talk, the bottom line is you're doing business in Australia. Australia, folks, okay, is a great mining district. I mean, it's huge, okay? So doing business there, Fred, doing business in an Australian dollar, talk to me about as we go forward, what are the pluses to being in Australia and dealing with your expense ratio in the Australian dollar?
Well, right now the Aussie dollar, everybody thinks it's low, but it's not far off of its historic average.
Yes.
Australia is one of, I would say, the top 5 mining jurisdictions in the world. Right up there with the U.S., Canada.
Yes.
It's a great place to do business. The Northern Territory just lowered their royalty rate from what would have been the equivalent of 7% ad valorem tax to a 3.5% fixed ad valorem tax or royalty. And, I think that just speaks to the incredible support for the extractive minerals industry, the mining industry specifically.
Well, it certainly does. And I mean, with rights, it should, because the bottom line is that, when you do get this mine up and going, the amount of jobs that are created, good jobs, are pretty amazing, right?
Absolutely. And it's not just us. The Northern Territory's leadership is very supportive of the mining industry.
Yes.
They recognize that more mines is generating revenue and generating jobs for the territory is something that's very important for the territory. And they're anxious to see that happen.
Yeah, there's no doubt. Well, listen, Fred, we really appreciate the update. I know you've been, working your butt off for a long period of time. The cool thing is that, we finally are getting the price of gold And, I would say that, we know that, gold, silver, speculative, all of that, but I don't think it's as speculative as folks think anymore. I think it's a solid deal, period. I mean, because asset price, feel it, taste it, buy something with it. I mean, I think it's real, and I think the dollar on the other side, is going to come down. It'll still be strong in correlation of other currencies, but the bottom line, it's going down. And if that's going down, commodities are going up. And
we definitely believe in a strong gold price, and we think that bodes nothing but good news for Vista Gold and our Mount Todd Gold Project.
No doubt. And listen, it's been a great run, and I appreciate all the work and all the tigers and tigresses out here. Also appreciate the work, Fred. You have a great one and a safe one, man, okay? Look forward to having you on again.
Thank you. All the best.
Thanks. Take care.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow's up 41, Nasdaq's up 76, S&Ps are up 8. Let's get over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can get hold of Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ord, what's going on, brother?
Okay, this is kind of a new format. I guess you got my charts up.
I definitely have your charts. The voice we still got to work on, evidently, but we get the charts. So just give it the best you can, and we'll do the same on our side. We'll get this done, Tim. I was on vacation last week. I'll get it done this week for sure, and I apologize.
No, that's okay. Can you hear my voice?
Yes, we can.
All right,
yes.
All right. Let's go to the first chart.
Okay.
And actually, I was a lot more bearish a couple of weeks ago, or a week and a half ago, than I am right now. But the first chart is I got stuff shaded in light pink. The times of days up in a row.
Right.
Back in May, we had 10 days up in a row. Then June, we had 7 days up in a row. July, 7 days. Then August, we had 8 days in a row. And September, we had 7 days in a row going into, September 16th or something. 7 days in a row.
What a trend, huh? Yeah.
Yeah. It's a pretty powerful market. This is kind of rare to get these many up days in a row for a constant since May.
Yes.
But in all cases, when you get at least 7 days up in a row, sometimes the market will flip sideways for a short period, then continue higher. The time in July, we hit that high and we went down for about a month or so. Then we went back up. Then we went 8 days in a row. Then in August, then we had approximately about a 50% pullback. Went right into another 7 days up in a row. We had higher highs, but what I'm saying here is normally when you get 7 or more days up in a row, the market usually does a lot of times hit a higher high, sometimes not very much of a higher high, and sometimes a little bit higher high.
Okay.
But we always go into some sort of a consolidation. We'll either flip sideways for a little while, then hit higher possibly. But I'm thinking we're going to pull back here.
Okay.
After 7 days up, we went up on July 19th. We spiked up, and we hit a higher high. And then since July 19th, which is like Thursday, we haven't done anything. We just basically stayed here.
Yes.
But if you notice the bottom window, which is the SPX fixed ratio.
Okay.
Every time the S&P hits a higher high, you want that ratio to hit a higher high, and that's not happening here.
Right.
So you got a little bit of divergence going on. So let's flip to chart 2. You can actually see it a little bit.
Okay, I have it. Yep.
Okay. Basically, we've been diverging since July. The bottom window is the SPY. The top window is the SPX fixed ratio. And you can kind of see what's going on here. So the ratio doesn't really lie. The ratios is actually a kind of a put call. Well, it is a put call. The VIX, rather, is a put call indicator. It kind of measures premiums of the puts and calls, and so it's kind of a sentiment indicator. So I guess the smart money right now is being careful. They're not really bearish. The reason why they're not really bearish, because the VIX is still pretty low. Everything below 17 is usually a good intermediate term sign. We're coming in a little less than 16. So they're not hugely bearish here. They're more fairly neutral.
What's interesting, Tim, is that for a higher market, we know that's what you need, right? You need people nervous, and you need to go sideways, building cause. Yeah. So this is intriguing, man. Yep.
Yeah, we're going to have something here pretty slick. Let's flip to, this is where, let's get down to the nitty gritty. Let's go to chart 3.
Okay, I have it.
And this is what I'm looking at. I did this chart a couple hours ago, and it's probably going to remain the same. But I do, we both do. We're kind of, you and I are kind of volume
junkies, no doubt. That's right.
Junkies, we're experts. At least you are, anyhow.
Yeah.
But
you are anyhow, big time. Yeah.
Well, anyhow, on July 19th, which is that first dotted line,
okay,
the that was the highest high so far in this year until today. We tested a high today. We did break above that previous high we had. Actually, that was July 19th. I probably should have put a date there.
Okay.
And we're testing that high right now. And it's when you test the previous high and you close below the previous high and volume shrinks at least 10%, that previous high is going to be resistance. And today's volume, in my opinion, we got 20 minutes to go. We're nowhere near July 19th high volume, which is last Thursday's volume. We're not even coming 50% probably.
No, it's pretty. The contraction is huge, man. Huge, no doubt.
Yeah, contraction is huge. And you notice when you break, which we did touch a new high today. We didn't hold it so far.
Yeah.
But you need a sign of strength through a previous high to have confirmed the breakout to the upside. Well, here we're doing the opposite. We can't even get to the previous high, and volume's pathetic.
Yeah, it is.
So probably we're not going to get through the previous high. So what that means, if you can't hold above the previous highs, you'll go down to the previous swing low. Well, the previous swing low is last Thursday, or last Wednesday's low. Anyhow, it's where that gap formed.
I see it. Yep, I see it.
Yeah. So I'm thinking, at a minimum, we go down to that gap.
Okay.
Now, if we test the gap on higher volume, that means that gap will not hold support and will go lower. The next lower thing is basically the September low, which is, again, back down around that 540 area. So it depends. If we do go in the gap, which I think we will, after you test that gap on lighter volume, that gap's going to hold support. Well, the volume on the gap is last Thursday's trading range. So,
yes.
So I'm thinking that gap's probably going to hold. The numbers will tell the story, but you got the VIX showing a bearish divergence, the SPY VIX showing a bearish divergence, and so I'm thinking we're going to have some short-term consolidations still here.
No doubt. Now stay right there, because and then you got to remember something, folks. Okay, Tim has been walking us through this market, and these indicators are so cool, it's amazing. And in particular, on a longer-term basis, still have that zag breath indicator that we're going to be higher. So this is really cool, man, no doubt. Tim, stay right there. We're going to have a quick break. We're going to come right back. We have the Dow right now, folks, up 26. NASDAQ is up 85. S&Ps are up 7.5. And one of the biggest moves out here today, folks, is the silver market. Silver's up $1.40. It's about time. 32.49. We get gold. The gold is not stopping. Up $33 at 26.85. Don't forget to get hold of Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow Industrials up 25, Nasdaq's up 91, S&Ps are up 9. And Tim, I think I'm on, the third chart. Yep.
Yeah, chart trade. No, you brought the Zwag breast thrust indicator. I think that was triggered back in, I forget when that was. But anyhow, it did predict the market, a bull market going forward is kind of a longer term indicator. We also talked about on your show the RSI hitting above 80.
Yes.
Back it actually was July 10th.
Yep.
The RSI hit 81.98. So almost 82. And previous times that has happened, the market always hit a higher high, but a lot of times you had a short-term consolidation, and that's what we had starting around July 10th. We went down, kind of went sideways. But a lot of times when the RSI, which I put that chart up here, but I forgot to. But anyhow, when RSI does hit over 80, actually above 80 but below 85, it usually marks the halfway point of the move. So that July 10th was actually pretty much where we are right now, just a smidge below, but pretty much where we are. So in a nutshell, we're probably halfway done of this rally that preceded it. So I haven't done those numbers yet, but this probably sideways pattern that's been going up and down from July to our current price, even though we're kind of setting at a new high here. This sideways pattern is probably the halfway point of the next move up. So, my opinion, we're going to move it at least another 10% higher from around current levels.
Yes,
so,
listen.
Things are going to get,
When you brought it up, that's why I brought it up again. I think it's that important, folks, okay? Because we'll all, we know that if you can get a longer-term range, which is very hard to get, but that indicator is a sweet indicator. And then between that and the RSI, and I can tell you, Tim, how this market's trading, I think people, I think it's the building cause, man. Yeah, we can pull back a little, but I got a feeling that, and then on me, it's fundamentally because this dollar looks like it's going to go break lows, Tim, the dollar index. And if that breaks lows, that dollar wants to go to 89. That dollar goes to 89, we're going to see the S&P go to the moon and gold and silver go to the moon. Yeah, because that's 10 points down from where we are right now. And there's nothing in between it. Do you know what I mean? So it's like, okay, if you're going to go, you're going to go. So I really love that indicator. And, what you've taught us about it, particularly when Tim just brought up this halfway move, folks, okay? Go back to some of the other shows because he shows the halfway move. You showed us those halfway moves, Tim, when it was happening before, which was so cool. And when you put it together, it seems unbelievable, which makes it even more believable. You know what I mean?
yeah, that's true. Yeah, all these indicators, I mean, these are obscure indicators. I kind of just observed them over the years. And,
yes.
And trouble is the pattern keeps repeating and repeating and repeating. And so you quit doubting it.
Right.
You take it as verbatim.
Right.
So, but, they have a chance to be proven wrong before the year's out, and let's see that happen.
Yeah.
But right now, I'm leaning, the bigger trend's bullish. So,
yes.
Cool. You want to get to the gold market?
Yeah, sure. Absolutely.
All right. This is been showing this chart on and off on your show for a while. It's just a short-term chart.
Yeah.
It's fairly short-term, but it can be short-term. But anyhow, it's a momentum chart. And the bottom window, the top window is the GDX. Bottom window is the GDX up-down volume percent with the 50-day average. So it measures just the up volume, down volume, takes 50-day average. And in a nutshell, when up volume on the 50-day average is above zero, the market's in an uptrend. When it's below zero, the market's in a short-term downtrend. And we've been pretty much above zero on this indicator. That's all of the light green shaded areas or time. When this indicator is above zero, we're coming in, when I made this chart, a little over plus 10. And it's been holding in that vicinity since April. So it's April, May, June, July. It's 5 months now.
Big number.
Yeah, big number. And it really is not showing a great weakness from what I can see. And if you look at the top chart, we're starting to break above the old high of 2022. We're up against that high. Well, we're breaking that high right now. So we're kind of breaking out of this sideways trading range. And the Weisskopf method, the cause.
Yes.
Because, really since mid-2020, really the market's kind of, GDX just in general moved sideways here. Didn't really go anywhere. I mean, went from 22 to 40, which is a big range. But in the bigger time frames, it was just a sideways market. So
and then last week we had a huge expansion of volume on the GDX. I mean, we did 122 million. The week before was cool too. It was 102, and then we were taking swing points out that had 108. But the 122 we needed. But that's pretty cool. I mean, we're getting more buyers, man, which is pretty cool.
Yeah. I think, in a nutshell, we were talking last fall, I think, and we were talking kind of bullish, and the market kind of went dead there a little bit. I don't think it won't. And I thought, well, maybe the indicator failed or something. And I had several different indicators kind of flashing the same sign. It was bullish, but the market just doing squat. And that kind of out of nowhere, it got into rhythm, and finally everything did what it was supposed to do, I guess you might say.
No, I agree. I was nervous, man. Let me tell you.
Yeah, I was too. I'm thinking this is supposed to be decent here, and it was just kind of just doldrums.
Yeah,
and it was quiet before the storm, I guess you might say.
I love it. I know.
Yeah, so everything's starting to pop up. If I don't have it shown, but the bullish percent index, which measures the percent of stocks that are in point fear buy signals, up around 85%.
Okay.
Which is 85% of the stocks on Goldminer's index are on buy signals. So that's a relatively strong market. So
and then I get the last chart up now, Tim. The HUI with the talk to me about this.
All right, quick chart. Okay, this is a HUI gold ratio monthly chart. In a nutshell, I just put a Bollinger Band on it.
Yes.
And when you're above the Bollinger Band, it's bullish. When you're below, it's bearish. And when you get signals of this type, they're usually a year and a half or longer. And the last one was triggered, I think it was June of this year. It doesn't catch the exact bottom or the exact high, but it keeps you in the trend.
Right.
And so this, and I have other monthly indicators that gave buy signals also, but this is a good one. In other words, the HUI, or the gold stock right now, is outperforming gold, and has been doing that since 1st of June. And again, these signals last a year and a half or longer. So at minimum, we rally into late next year, if it's just the minimum, but it could last as long as 4 years. So 4 years added on to June of this year, you come in, June of 2028.
Holy cow.
That would be the longest. So it could be. I think it's similar to 2000. So we'll have to wait and see.
I agree. Listen, man, me and you were some of the only gold bulls at that point. I remember doing the gold shows, even the gold CEOs. I just had Fred Ernest on from the CEO. He's bullish, but I remember in 2002, I'd have CEOs on. They were bearish, and we were bullish.
Yeah.
Well, listen, man, you have a great one, safe one. Look forward to speaking to you on Thursday, Tim.
All right, love you guys.
Take care. Love you, man. Stay right there, folks. Come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 44, Nasdaq's up 97, S&P's up 10. Let's go take a look at El Dorado Gold for a couple tigers out here. EGO. There we go. So we got the low is 830 for the year. The high is 1838. Take a look at this baby. Let's put this on a weekly for a second. So, you know, we're going to build a little more cars here. But this is a good-looking stock here. Let me put this. I got to actually put this on. I'll put this on a monthly. Yeah, I mean, this thing's on its way to, what is that number there? Yeah, 1995. I was talking about Heckler yesterday. Heckler's breaking out right now. But take a look at Heckler. That silver market's going. You can see the wide price spread, accelerated volume on Heckler today. So let's put this on a weekly too. Yeah, see, this is breaking topside. And I had the volume last week. Let me see this. 680. Yeah, that's good. What is that? 760. I got to pull this back more. I think it wants to go to $9, $9.65. I remember. 1 second. Is that $9.65? Yeah, it is. $9.35. So Hekla's on the way to $9.35. And the high out here in Hekla is like $21, $11. This is a nice setup, though. Built enough cars, going up, has volume up at that spike high. When I say volume, in the monthly it has 186. And we did 201 last month, and we've already done 185 this month. This is a good setup, man. This is pushing highs with volume. Next time they come out with numbers is going to be November 6th. They're going to be looking to do 231 million. Top line, 3 cents to the bottom line. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks.